What is going on, my future meta millionaires? It's your boy Terry Stonkers, and welcome to the channel, baby, by the dip. All right, guys, man, what a day today. This kind of came out of nowhere with the whole Kerrisdale short report. Holy smokes, man, this thing is just something else. So we got a lot to go over in today's video, so hope you are ready for it. If you are, smash thumbs up, leave a comment down below. It helps out the algorithm, baby, and get this word out about Meta, because we want to freaking torch these shorts, and Kerrisdale is on the list, baby. So if you're ready for the video, baby, let's go. All right, guys, so here is the full report. Looks like it's 23 pages. I'm going to copy and paste this down below in the pinned comments. So that way, if you guys want to read over the whole report, we're going to touch base on their tweets that they did today. We got to go over the FinTel information. We're going to talk about Google Trends and how we need to keep an eye on that as well. We're also going to talk about something John Berta retweeted that I think has a lot to do with something that's just leading up to the shadiness here of this Kerrisdale Capital. All right, guys, so here we are on their Twitter page, Kerrisdale Capital. Here's their first tweet. We are short Mmat. Report available at care.com. Mmat, which is that report that I just showed you. MetaMaterials has no real revenue or useful technology. Instead, it features sordid history of disappearing segments and failed products, fake medical devices, and Twitter promotion enable capital raises. Okay, a lot of people do ask, have I ever been paid to promote MetaMaterials? And people say, Terry, why are you still promoting the stock when it's going down? Because I love the company. I got this here on the TV, guys, for a reason. In George we trust. I believe the CEO in what he says. He's getting things in the works. I have never been paid by MetaMaterials. I have actually never even spoke to George, actually, other than just a couple replies to an email. I tried to get him for an interview. Unfortunately, that didn't happen. But maybe when all this dividend situation's out, maybe we can get George on the channel for an interview. That's why I was contacting George, hoping to get an interview, but he can't really talk about much, so the interview would be kind of a little dry. So if we go here to the second part, it says, founded in 2011, Meta for years claimed it was developing thin, transparent films for solar, LED lighting, a laser glare protection markets. The LED lighting segment mysteriously disappeared in 2020, while the solar tech is still early stages 10 years later. Point 3 here. The solar segment's crowning achievement has been used stock photos and web to misrepresent non-existent progress and sign a suspicious R&D deal with Lockheed. Through a Canadian subsidiary, Meta later disclosed ceased activity before the deal. Number 4, LGP, meanwhile, is a joke. Meta's 2012 airplane windshield project produced nothing but disappointment in 2017. The pivot to overpriced LGP glasses have failed almost as badly, selling 100 pairs for $60,000 in 4 years, unable to manufacture even at a small scale. Worse, Meta's wireless sensing segment is a sham. A bailout acquisition of its own CEO entity, the segment's non-invasive glucose monitor doesn't actually exist, and the research behind it assembles a sloppy high school lab experiment. Man, this is just like such a joke. Meta's NanoWeb isn't much better. No advances have been made since 2016 acquisition. The founding scientist left in 2018. A key patent license was terminated by Meta years ago, all while competitors have commercialized increasingly better products. Number 7, Meta's penny stock reverse merger with Torch features significant Twitter promotion leading to 2 share price melt-ups, accumulating and dumping of 160 million of stock onto retail investors for multi-billion valuations for a company that barely hint of an actual business. What I think they're getting at here is that reverse split. Now, that was to pay off the debt that Torchlight had, so that way when it merged over to Meta, they had no debt. So I think that's what they're getting at. Yes, they did do that, and the shareholders did pay for that, but they didn't dump it in a sense, guys. They did it so when the merger happened, there was no debt being carried over. That's why that happened. Mmat is a collection of failures, fakes, and negligence, topped off by a shady penny stock reverse merger, which incidentally is being investigated by the SEC. And disclose you can find Meta's 10Q hard to imagine stock is worth any more than $0. I believe it was actually a quarter is what they said this stock was worth, 0 cents to a quarter. A couple key things here. If you just go to the Google reviews, they got 43 reviews at a 1.1 rating. Pretty funny stuff there. If we go here to the Facebook group, a lot of great DD here in the Facebook group, guys. Make sure you go follow them here in the Facebook group. This is the one you want, the public group that has 247 members. Maybe I'll try to put this down in there as well, because we need to get, you guys need to get in here on the Facebook group as well. They got all kind of posts in here talking about the short selling stuff. A lot of great stuff. The shorts are on. One thing I did want to touch base on, John Berta, right here, John Berta, which, you know, he is the former CEO of Torchlight. Short and distort, in my opinion, this is a great service, by the way. If you're looking to get indicators of movement, he's talking about unusual whales and interesting large MMAT put volume before the news. So how ironic is that? That these hedge fund puts in these huge put orders, and then they release the short report. Is that a little shady? Is that market manipulation? In my opinion, you're damn right it is. Something is really shady about that. I don't trust these shorts. I don't trust these hedge funds and what they're doing. You know, like I said, everyone has their own financial situation. If this report scares you, do what you need to do. None of this, like I said, none of this is financial advice. But I'm not going anywhere. I'm not effing leaving. Anything, this report, honestly, put a smile on my face, because it's going to draw even more attention to MMAT. Now, we are in a bear market here in the stock market, where the small caps and mid caps are getting destroyed right now. Yes, we're aware of that. But what I'm going to keep an eye on here, guys, is the Google trends for MMAT. We are currently still going down. But once this market turns around here, I think tomorrow is the Jerome Powell speech, I look to see these Google trends do a reversal on MMAT. This short attack, that Carousel recently shorted CEI, I believe, as well, another penny stock, Camber Energy. They shorted them as well. And that did short squeeze before all this market craziness happened. But MMAT now, they're beating a stock that's already down. There's, like I said, there's so many other stocks that this could have, they could have went after, but they went after us. So I'm not really sure what the reasoning is. Let's go over the Fintel information, guys. Pretty interesting stuff here. We're going to start to see over these next few days how this short report, I don't even know if the short report really has anything to do with anything. It's just the market, people selling off, people's getting scared. People's down 30, 40, 50, 60, 70% in positions. Yes, even I'm down. Everyone's down in this market. If you're investing in small caps, your portfolio is red. Mine is red as well. But you know what they say? You never lose until you sell. So that's the thing, guys. You never take a loss until you sell. And that's what I'm holding up here. Look at the momentum. 87.45, 5,500 rank out of 43,000 stocks. What I want to go to here is show you the short interest report here according to Fintel. Now, they did have an update today, and it's pretty interesting. We're going to go over that. Short squeeze score 75.89, ranked 298 out of 5,400 stocks. Check this one out. This is a key one. Short shares availability, only 7,000 left, guys, and that updated 17 minutes ago. So you darn right. What was it? 200, 300,000 shares yesterday, and now they're down to 700,000. There was even down to 1,000 earlier today. So yeah, they are shorting the heck out of it, and it wouldn't be surprising me if they're the ones doing it. The short borrow fee is a 1.5%. And if we get out here and look now, there's a lot of new information. I'm not going to break down all the information, but it has here the FINRA non-exempt volume, the FINRA exempt volume, FINRA short volume, FINRA total, and FINRA short volume ratio. We will cover what everything means in a separate video. Mainly wanted to focus today on this whole Carousel short report. As you can see here, the FINRA short volume ratio is a 53.91. And we do not have the aggregate short volume ratio for today yet. But yeah, very interesting stuff. Like I said, I'm going to put the link down below for this short report so you can go do your due diligence. Like I said, you can make your own decisions. If you think this short report has any merit, I don't. I think it's a load of BS. If I go here to the Facebook group, one post here pretty much sums it up. And by our buddy Dylan Brush, right here it is. That sums up the whole Right there it is. That sums it up right there. That's what I think about this short report right there. I couldn't agree anymore. This is why I love being on the Facebook group. A bunch of great guys and girls on here. Like I said, they got all kind of DD on here. Liz posting here a 1.1 rating on Google. Oh, here's the other one I wanted to share you guys. I believe this was on Tip Ranks. That's what I believe this was. The blogger profile, Carousel Capital, Seeking Alpha, financial blogger, ranked 7,992 out of 8,175 bloggers. That is horrible. There's not many more, what is that, like almost less than 200 people that is, say, worse than them on their reviews. You can see their success rate is a 45%. 19 out of 42 ratings were successful. And I believe, well, I know this one's going to be another unsuccessful. So they're going to be 19 out of 43 on this one here. And the average return is negative 17.3%. Imagine that. When you go, why would you short a stock that is down crazy? Why wouldn't you pick one that's going high flying right now? Doesn't make any sense. I want to end the video here. Our buddy over here, Moon Market Man, he was one of the original OGs that covered Torch back in the day with metamaterials. And I must say, he is the one where I heard about Torchlight / metamaterials. Yes. We all have to hear about a stock somewhere. And this was the channel that I originally heard about Torch. I watched his videos. He was covering the Torch. And then it got me really interested. So that's why I started covering Torch, because I really liked what was going on with the Torch. And I love what Meta was bringing out and the future we got. So go check out my man, Moon Market. He put out a great DD video earlier today. I did go leave a comment on his video. And I appreciate it. If you all go over there, find my comment. I said, great video, Moon. The future Meta Millionaires is ready to battle. Let's go. What's this here? Marlon Kirby says, buy the dip. And I got a couple likes on there. Let's keep the likes going on my comment there. Show my man Moon some love. Like I said, he was one of the original OGs covering. He has a lot of great content as well. So hope you all enjoyed today's video. If you did, smash thumbs up. Leave a comment down below. It helps out the algorithm, baby. And I'll catch you on the next video, guys. Peace.